Hello, everyone, and welcome to our channel, The Nerd Facts. Today, we will discuss about a company called Linde Engineering. What we'll do is that we will quickly go through over its fundamentals. We will look at different aspects of this company, right? What it is and what is how is it doing. Post that, we will quickly have a look at its technical standpoint, its technical chart, right? And we'll see, can we go ahead if I say I want to invest in the company, can I go ahead and do it, or wait, or uh, what next? Essentially. With that, let me hand over the mic to my good friend Amit for a quick fundamental analysis. Amit, over to you.
Thank you, Sumit. Let's get started with the fundamentals first. Uh, yeah, I hope it's all visible to you guys. So, Linde India, right? Quickly get started with the summary part. Right, a subsidiary of BOC Group UK, and it's primarily manufacturing in the industry of manufacturing industrial and medical gases and construction of cryogenic and non-cryogenic air separation plant, right? And if you want to understand more detail, you can always look the segment that's in gas and related products, a healthcare business, project engineering division, and this revenue, whether gas related product 81%, project engineering 19% of revenue that they're coming in. That's the geographical split you want to have. Then the client, ONGC, HPCLs, of course, the oil companies, but apart from also we have a Tata and SAIL and JSW2. That's on a primarily overview of the business it does. Okay, with that we'll get into the fundamental aspect. With the P in the quick glance 75 looks expensive, but let's also get to other parameter. ROC of 16, pretty okay. Price to value and the quick ratio, right? I mean, the quick ratio is something, right? We're looking at 1 year of liabilities and how much liquid you can, all the asset can be converted to liquid, and that ratio, liquid to the liabilities, is 2 point, the healthy too. ROI in 50 is pretty fine. Gram number is 638. That, based on that, company looks to be overvalued on the gram number perspective, yeah. PEG is 0.96. With that, we slightly quickly get into technicals. Of course, technical detail taken care by Sumit. But I'll just get into this stock. Let's pick from 2016 or maybe 2013. 2013 till somewhere maybe October 18, it was nearly a flat consolidation, long consolidation, and then slowly start picking up. And from here, right, somewhere August 20, it had started picking up like anything, like a rocket, right? And the moment after touching of high of 2759 is somewhere getting into now 2426. That's where at the moment, right? That's on a high level on the stock price movement. With that, company is debt free, healthy of CAGR 70. It is given wonderful return to shareholders. Now you also look at the peers first part. So Linde India return of asset 810 is good. Okay, it looks with a Deepak Knight, right, in the same segment. I have to check that, but probably the combination on screen is not that. That's fine. We don't have to get into that. So return on assets is 10, pretty healthy. Already we have seen the return on equity. Interest coverage is wonderful, right? 106. What I know about Deepak United, even that's a fundamentally very good company. We just compare on a high level. It looks, on the return on asset, of course, Deepak United would be healthy, but we don't want to get in now in the stock for now. See, the ROC of 16 again is a healthy number. With that, so what we looked at, the price and to earning is something that looks expensive, but we see that the premium is quoting that it makes sense. We'll get into operating profit on quarterly basis, and that's around 100 to 2090 to 168. So what you see, there was a dip in around COVID area. That's around March 2020 till September 2020, but then from there it has picked up. So just to that looks quite healthy. Numbers are improving slowly. With that, EPS is going down. Probably they must have issued a bonus or split. You have to see that why it's happening. Of course, this was deep, so I'm ignoring these three. 4 point high because that's one a COVID part doesn't make sense. So now with that, now because COVID is something, that part you should ignore, doing the analysis, either the fundamental technical, because something that daily happens in decades and a lot of decades, I can say that. So now with that here, December 2011, 228, the company is slowly, gradually growing like anything. So that's perfect. Yeah. With that yearly basis, the EPS looks wonderful too. Yeah, slowly there was a dip around 2017 18, but now in the last 4 years, especially December onwards, it's going good. Of course there was a dip in between. Dividend also, okay, it does pay a special bonus, looking at this 237% of dividend in the year 2014, but that's fine. So now look at the sales growth. It's growing. 10 years 7%, TTM 19. That's all the good sign to have. 10 years profit growth 24%, TTM 45%, 353. So you look at that, these numbers are quite healthy. Of course, this also reflected in your CAGR, stock price CAGR too. That's a healthy 1 year 42%. Return on equity, again, it is increasing. Last year 15%. So that's also a healthy sign. Now we already looked at debt equity. How much we have? Debt equity part is negligible debt it has. So that's a wonderful company that's growing in. Now the cash from operating activity, that's again growing like anything, right? That's very good company. Wonderful company. That's what it looks like. Wonderful. Cash conversion ratio is negative. What does it mean? It means company has the money right away. Okay, that's a negative. How I can explain that part? Debtor days, right? Inventory 28, days payable. So company buying is raw material. It has to pay money in 74 days, right? And days payable 227. It's other way around. So debtor days, they are getting money from the customer in 74 days, but they have to make a payment to their raw material 227. Okay, that's a healthy. It's always good to have days payable greater than, yeah, correct. That's a debtor days. Now with the inventory of only 28 days, it's a wonderful company from the cash conversion perspective, right? It's getting money right away, or before even make the same. To look, one way to look at that, there are the advances already for the product even before they have sold in the market. That's how to look on make it rational that way. Yeah. The promoter stake of 75%, that's again a very pretty good number to have. FII is also increasing the stake there. Looking at the public, it's only 14%. This makes the company quite interesting. I understand it's a bit expensive, so we'll also get into some other metrics that even Trendline provides. So look at durability, high financial strength. Company much farther from a bankruptcy angle. Okay. Valuation, of course, the one I quoted is a bit expensive. Momentum is fine. That means looks the way because the momentum they are looking at technically, they're technically moderate bullish. So still in a bullish trend. What we'll do, we get into checklist that they have prepared. Company has high durability, that's a financial low debt, yes, that's correct. So you can look at these metrics, right? Insider have not sold in the past month, no. So you can look at all those promoter pledge and all those momentum. This is a momentum part, and that's the one way to look at. And apart from, you can also do the Graham checklist. Upon the Graham, you already have a video, and just to I also explained this. I'm going back on the Graham on here. So that's basically 638 should be the price as per Graham and fundamental analysis that they do on each companies, the number that's arrived at. With that, I'll hand over to Sumit on the technical analysis and what his take on technically on this stock. Perfect. Thank you.
Thanks, Amit, for that wonderful quick fundamental analysis of Linde India. Excellent. From a technical standpoint, as we always do, we will look at the longer term trend of the stock. So here, what we have done is we are taking the monthly chart of India. As you can see, it is on a long term secular trend, and that is uptrend in this case. This is excellent. A simple observation, you can see that the stock goes up, right? It sort of consolidates and it goes up, and this is its behavior. You can see, these consolidations, right? You can see these consolidations here, or you can see, these consolidations here, or this consolidation here. You can see all these there essentially, right? Now, as we always say, always, go and have a look at what the company is doing. Is it growing or not growing? How is it valued and all that? And based on that, and when you're convinced, right, that just to note, we're not supposed to register, no buy, and no sell call, right? This is our analysis. What we do is we look at the fundamentals, we try to assess, if it's worth looking at. At this moment, what we can see is that certainly Linde India is in a secular uptrend. Now, what? 3 monthly it is. Now, again, from different perspectives, you're already invested, or if you're a new investor, that is, if I have already bought the stock and I have this in my portfolio, or I want to, invest this stock. If I have bought the stock, I don't see any reason right now to sell this one, right? Because the uptrend still looks pretty bad. And if I'm a new buyer, what I'm really looking at is there is a very tight consolidation here. Look at this, right? Now, what do we do? Or what do I do? From a monthly perspective, uh, once it breaks, this or this level convincingly, essentially, I will start, adding stuff. That's one way to look at it. But that's from a monthly perspective. From monthly perspective, we are meaning, what it really means is that, you are totally into the company, you understand what it's doing, you understand what its business is, and you understand, that for next 3, 5, 7, 10 years, this company is going to do well, or at least the projections or the trajectory says so, right? If that is the case, I'll go ahead and right now invest at least whatever I want to invest, 30 to 40% of it right now. If I want to do that. Else, what I'll do is that I'll go and look at at small time frame what exactly is it doing, right? And uh, when is it that exactly that I go ahead and buy? Let's look at weekly what this is. So from a weekly chart, we can again see it is in a secular uptrend, right? And it is sort of making lower lows, which is excellent, great. Now, this is the high that I am looking at, and this is like for April 22 for 1 year. So for 1 year, there is a consolidation. But what we see also is there is a lower low sort of formation at this point in time. Right? What do I do? If I'm confident about the company, what I'll do is that I will have, or I will take some tracking position here, maybe 5 to 10% of whatever I want to invest. Right? I'll invest at these levels. Yes, this is a dangerous level, mind you, because it made a top at around 4100, right? And it might also reverse. That's what the case. So what I'll do is that I'll probably go ahead and invest 5 to 10% or whatever you are comfortable with of the total capital that you would want to invest in India, right? I will go ahead and do that and wait for uh, this higher 4200 to be convincingly reached. That's what I'm going to do. Now look at daily. What is it doing? Of course, it is going to follow what we is saying. Now you can see from a daily time frame that this was some sort of resistance which stock after post this, right? Around 3700, 3723 the values that we see here, right? Now what you see is that it did continuously take this and it sort of retested this and it is going upward. So looking at daily time frame, confidence grows, and there is a possibility that this will keep going upwards, right? And even if it, let's say, tries to retest, right? One of the retest zone is this, and the other one is probably this, I would say, right? Again, same funda, same concept. I'll go ahead and invest at 10%. If it retests this, I'll wait to see a consolidation and probably a movement upwards, right? If it moves upwards, I will go ahead and still, deploy another 5% or so, right? If it goes, below this, what I'll do is that I'll certainly go ahead and exit the stock. I know, I mean, sorry, we're talking about long term, right? Now, if you're long term for 5, 7, 10 years, right, perhaps you can take this, right, and you can wait for 200 levels and see how this is behaving and then add. But if you are, let's say, in for 3 months, 6 months, or 4 or 5 quarters, I'll just wait for this, maybe, and I'll wait for this level, 3200, and wait how it behaves there. If it breaks 3200 levels, I'm certainly going to exit, no matter what, and I will wait again to make it a sort of a higher high, higher low formation. If it doesn't do that, let's say, right, you invest 5 to 10% here and wait what it does. So let's say in the next 1, 2, 3 months, it reaches around 4200, right, and it crosses and there is some consolidation and goes upwards. When there is a consolidation here and you see a breakout of that, I will go ahead and deploy another 30 or 40% of whatever I'm going to invest in, or whatever I have marked for Linde India. Post that, I'll again look for a consolidation, and if it breaks upwards, I'll again go ahead and invest another tranche. So this is how I will go ahead and invest. But overall, what we see here is that certainly the stock is in a trend, right? Certainly, Amit, correct me if I'm wrong. There are no aspect red flags per se from the quick analysis, right?
Of course.
But yes.
Fundamentally, there are no red flag except that a bit price to earning looks bit expensive. But normally, all the growth through stock will have, for example, Pidilite. Look at the P. Relaxer. Look at the P. Even a Titan, right? So yeah, that's correct.
Yeah, excellent. So again, when investing above these 200 levels, right? Keep tracking what the company is doing. Keep tracking what their quarterly earnings are. And if you're convinced with the quarterly results that they are doing, right, if you're convinced with that, then keep adding, in small bits with this company, right, stock essentially. And once, the quarterly profits or whatever the quarterly results are, if they are not up to the mark, only then think about selling it. As of now, I see that we can start accumulating and adding to Linde India to our portfolio. So that is what I had shared with respect to technical analysis. Amit, over to you.
Thank you for the perfect and detailed analysis, Sumit. Just for the audience, we just invest the stock market. We both of us. I mean, we are not, what do you call it, stamped by any of the exchange or any of the regulatory body. It's just all analysis, and you felt it could be useful to you. Do your own analysis before buying and selling. But since market is on a downturn, we just failed to take few stocks and do our analysis and share with you if it's useful in some way, if you rely. So kindly like and subscribe our channel. With that from both of us, thank you for being here. Yeah, thank you.